All right, good morning, everyone. It is 8:43 in the morning of December the 7th, 2021, and this is my pre-market strategy session. So, first thing I have up is AFRM. AFRM really pulled back here. This is interesting. So, I have a Fibonacci that extends from this high back here in February of 2021, almost a year ago now. Down to the bottom here in May of 2021. And it's basically what I've been using. I think there is another Fibonacci. I have two Fibonacci's on it. This Fibonacci is basically the one that I've been using in order to trade AFRM. And I started trading it here after it gapped up. I think I remember the first day that I traded it was here on the 10th of September. I did okay on it, So then I was looking at it some more, and it ran up here, and well, basically I started buying options. I don't remember what the strikes were, but I started buying options right in here in this area for support here off of this Fibonacci, and it really just took off. I made several $1,000s off of that trade on each option that I bought, and I had 8 of them. It was pretty nice. So I stopped paying attention to it after I sold. I think I sold all of my options right here. I was looking for it to break above that level right there, but after being up, I mean this was 109 to 146. Oh, that's right. I remember I bought 140 strikes. And I bought it when it was down here. I bought it in anticipation of I bought the expirations were really long dated. I think they were into like March of next year. I really wasn't expecting it to make a move like it did, but it really, really launched. And so I just cashed out. I was like, when a stock moves $40 in your favor, practically in a week, it's hard not to take those profits. So I did. I took the profits right there, and I really haven't paid any attention to it since. Now, let's see, it was yesterday. It did a textbook bounce off of the 61.8. Oh, I'm sorry, the 50%. Yeah, textbook bounce off of the 50% level right there. So it's really pulled back. Let's see, from top to bottom here. It peaked on the 8th of November, and then hit the bottom of its trough here at 45%, a negative 45% move there. Brutal, really, really tough if you're holding there. That's a tough thing to hold through. And so today, I'm looking for it to give a trade. Now, it's bullish. I'm bullish on AFRM. However, I'm willing to take a short position very temporarily. I mean, like intraday scalp. If the stock jumps up here to let's see, what is that? 121.80. I'm willing to short some shares here, very short term. If it goes all the way down here to between 108.99 and 108.55, I will be buying more call options on it. If I short, I'm going to short the stock. So it's kind of nice to be able to short, without using options, because the options really are set up. With the spreads and with the way they're valued and so forth, they really are set up to take your money. You got to be really good at trading options in order to be profitable on them. Okay, so that's AFRM. SYTA, this is SYTA Mobile. SYTA Mobile announced today that it's received a 1.3 million purchase order for their SD7 devices. Basically, what this company is trying to do is it's trying to sort of update the emergency response system's ability to communicate. And so that's everything from ambulances to police cars to firefighting and so on and so on. Yeah, it's getting itself, off the ground here. Let's see, on a quarterly basis, its revenues aren't looking all that great, and the revenues were falling there for a bit, as well as earnings. Earnings were taking a pretty nasty hit there too, and earnings have just kind of fallen off big time. Well, it's a small cap. It'll trade on momentum and news, basically, and so that's going to be the setup for today. I have a Fibonacci on it, and the Fibonacci that I set up is here's the previous day's close, and then I set the other end of the Fibonacci to the 100% mark. So if you look at here, let's just kind of pull it up here. So its previous close was at 269, and I just doubled that to put the second Fibonacci level on there, and it seems to work, quite well. I mean, it works well. It did a decent job of predicting these levels right here, and so here it is. It's pulling back to the 50% mark at the moment. So a little bit of a pullback right in here. Let's see if we can get support at the $4.04 area. Again, it's pre-market, so I'm not interested in this thing until after the bell rings. All right, next up, let's see, MIME. This is a stock that I've paid attention to a couple of times. Now, if this thing opens up, this is packaged software. So if this thing opens up where it is right now, it's going to open up substantially higher. And so I'm looking for a pullback on this one in order to buy. And where that pullback happens, exactly where the buying is best, it's really tough to say. Let's see why it's popping up. I was just kind of guessing that it's popping up because of the broader market is running up, but let's see what we have. Okay, Mimecast to go private via proposed purchase by Permira. Okay, all right. So anytime these things get, anytime there's M&A activity and the news is leaked that there's one that's being bought, until news comes out that it is bought or that they're not going to buy, then it ought to behave rather bullishly. I'd like to see it dip down. I'd like to see it dip down to at least this 76.45. If it dips all the way down to 73.66, I'll be buying like crazy. So will it dip down below 79.57 and then run back up? That's a trade. If that happens and it breaks through, that's a trade. That's JZXN. Just hit $2 a share, a small cap. And then also same thing if it dips down below this 76.45 and then runs back up above it again, that's a trade. And then if it hits this, I imagine that it'll bounce off and that it shouldn't even dip down below today. But if it does, it's still, that's a buy. That's a screaming buy. Okay, JZXN. This is a small cap. This is a Chinese company. I don't really like Chinese companies very much. I have traded JZXN before. I don't think I did very well on it. I think I lost money on it. I'm trying to remember JZXN. I really don't remember where I tried trading this thing. I think it was on one of these days right here, where, let's see, the volume here is 9 million shares roughly, and I couldn't get a good entry. I didn't get a good entry. It was like back here or back here, and just really had a hard time with it. So today, I don't like to trade stocks that are less than $2 per share. So, and the reason being is that if it goes in order for it to go into a halt, it needs to move 10% within, well, I don't remember, 1 minute or whatever it is. And I'm usually looking for at least 20 cents profit per scalp if I'm going to scalp something, and this would be a scalp. And so 10% of $2 is 20 cents. So my minimum move, if something squeezes into a halt, my minimum move would be 20 cents. And so that's why I go for stocks that are only over $2. It looks like it's getting a little bit of a bid right here. So we'll see how it goes. We'll see what it does when it opens. See where it is when it opens. I haven't been very enthusiastic about small cap momentum, and when I've been trading it, I've been trading really small size. The things have gotten noisy. In fact, actually, I have CPIX up here. JZXN over top of 222 ought to get interesting. Okay, so CPIX popped up for me yesterday. I was still holding on to some shares from the first day that I traded it back here on the 30th of November. And I did well on it. I managed to catch, I bought, right at the open. It dipped down on this day on the 30th of November. Let's just kind of go back to it on the 10-minute. Where are you? On the 10-minute, 10th of November. Or 30th of November, I'm sorry. Yeah, so this thing opened up and it dipped down to like 403 and then went back above its entry again. And I put in an order for its entry price, and I got filled at like 409 or something. And I bought 2,000 shares, and it ran up, and I let it go at 525 a share. So I got almost to the top. I bought it damn close to the bottom and sold it damn near the top. It was a nice trade, but I only sold 1,000 shares instead of selling all 2,000 shares that I bought, and then just kind of let it ride. Now it went negative on me a little bit, and the reason that I did that is because I've noticed recently that small cap momentum hasn't been trading the same way that it usually does in a long time. So typically, in past experience, I would expect small cap momentum to make this move all entirely in one day, from like the high of 757 to its open here at $4.13. But things have gotten noisy. Now you can see here the volume is at 207 million shares on a stock that had a range from high to low, or let's go from low to high of all of $1.45, which is insane for a stock to trade 200 million shares and only have a $1.45 range. And so what I've noticed lately is that these things, FDA approval for a drug, big time, ought to go through the roof, right? Well, so what I've noticed is that it takes a few days. Like the first day that it trades, it's just super noisy, very, very difficult to trade on the momentum rules, so on and so on. But then 2, 3, 4 days later, 5 days later, it'll just pop up big time. And the volume here, for example, on the 6th of December yesterday was 35 million shares roughly. And this thing made a move from $4.16 all the way up to a high of $7.51, and that's on, what's that, 1/10, no, what is it, 207, 203, 6, on 1/6, roughly 1/6 of the volume. And it made a move that was significantly greater, to the magnitude of 2 times greater. The price action on the day that the news came out was only $1.45, and the price action on the day that yesterday was $3.45. So it was over a 200% move in price relative to the day that it opened on 1/6 of the volume. So I went ahead and let go of the last 1,000 shares that I had yesterday. And it was close. I let it go really close to the close. I think it was at $6.75 a share. So it was okay, so it was okay. Not bad, but I might jump in this thing again today. We'll see, let's put a Fibonacci on it here. So the 50% level is all the way down here at 488. I don't think it's going that far. 620 might be attractive and 550 might be attractive. I'm going to put levels on there for those levels. I'm going to put alarms on for those levels. 620, okay. Alarm, create, and then 550. Let's pull that. That's the right time. 550, okay. And then I can go to my 10-minute here. And set alarms on the 10-minute chart. All right. So the broader market, this is nice. Hedgeye has been calling making bull calls. Let me show you. I'll show you real quick. These levels are kind of old. I need to update them. Let's see. Where is the S&P? Do I put it on the? No, that's not where I put it. SPX. There we go. Okay. So Hedgeye had these levels. 4503. These are a couple days old, so they've probably changed. But basically, he said support. Keith McCulloch there at Hedgeye said support was going to be at 4503, and he's the high end here is 47.87. There's no guarantee, and of course these things go a little bit above and a little bit below, but that's what I was using. And I was buying here on Friday SPY contracts for strike of 462, and I was buying them down here when the SPX was at 450. So SPY was down here at 450, and I was buying strikes at 462 for an extremely low amount of money. And here we are. If it opened up right now, it would open up at $464.30. So I'm in the money. My strikes are 462. I'm not deep in the money, but I'm in the money. And the premium on those 462s, I think I was buying it at about $3.70 or so per contract. When it was down $3.20, I can't remember. When it was down here at 450. Now that it's up at 464, I mean that's a what is that, a $14 move? So it's working out. Oops. Now here's the VIX. So the VIX, I like to use the daily on the VIX to get a good handle on what's going on. Yeah, this is the risk range. This number is kind of old too. Hedgeye had 32.39 as the high end on the VIX. It did spike through that considerably, but it closed below it. So, and this number is kind of old too, 12.92. It's higher than that now. The low end on the VIX, he had this, I don't know, 2 or 3 days ago, down at 12.92. I think it's closer to 14 something now. So, yeah, that subscription to Hedgeye has paid for itself many times over. Okay, here's Bitcoin. And so I'm bullish Bitcoin. And the reason that I'm bullish is because although it closed below 53,000, it closed below it after spiking this $42,000 support level and running back up. Now, I imagine 53,000 if Bitcoin can get all the way back up to this technically 52,956.47. If it can get all the way back up there again, I think it's going to find some resistance. We'll see what happens. I've got 16th of December marked off as being a significant date. So if it's above 53,000 on the 16th, then I think it's going to be super bullish. If it's below 53,000 on the 16th, then I think it's going to be range bound for a while. So, all right, everybody, good luck out there. Keep your risk tight. Click like, share, subscribe, leave a comment, tap the bell, and I will see you at the recap. I am out.